हाँ,
नमस्कार, जय हिंद, जय भारत एंड वेलकम टू डेफ टॉक्स। हमारे साथ हैं संजय श्रीवास्तव जी और मैंने सोचा देखिए मैं बिफोर आई इंट्रोड्यूस हिम बड़ी सारी चीजें हैं हमारे देश के अंदर इस समय पर क्या है भैया हमारा तो इकोनॉमी टूट गई है, डूब गई है, सब कुछ हो गया है। तो मैं सोचा यार किसी को ऐसे को बुलाते हैं जिसके पास इकोनॉमी का थोड़ा सा हैंडल रहे। ठीक है, संजय श्रीवास्तव जी हैज बीन द बोर्ड ऑफ डायरेक्टर्स एट महिंद्रा वर्ल्ड सिटी। इन्होंने लीडरशिप रोल्स इनके टाटा में है, एक्सेंचर में है, क्रिसिल में है। मेक इन इंडिया के बारे में बात करते हैं, टीवी शीवी में काफी बारी आ चुके हैं। सो लेट्स ट्राई एंड अंडरस्टैंड कि यार ये इकोनॉमी क्या डेड है कि डेडली है, क्योंकि दोनों तरह के नैरेटिव सुनने को आ रहे हैं। नमस्कार सर, वेलकम टू शो।
Namaskar, Adi. Thank you so much for inviting me on the show. Great to be here. So I think your show timing is just perfect. I think the road from dead to deadly just got traversed in the last 24 hours. So leaving the headlines, we let's dive into what is actually happening.
सर सर ये बताइए पहले तो there's what OG the GDP has come down, OG this has happened, that has happened. There's a lot of these calculatory comments अभी जो आने शुरू हो गए हैं. A lot of people have started making those calculatory comments. Yeah, the calculation is like this, that. Just, in basic, simple 2-3 minutes, just help us understand. The main thing everybody talks about is the GDP number. Firstly, we've started saying कि यार GDP is not the right way to measure. थोड़ा different होना चाहिए, क्या होना. So what's your opinion? इसके ऊपर थोड़ा सा just throw some light. And where do we stand as we are in India? कहाँ खड़े हम लोग?
Sure, Adi. So I think this fundamental question it is a classic dichotomy between what is actually we are seeing in the headline, which is everything seems to be gray and gloomy, and vis-a-vis what is actually happening on ground. And I think yesterday, as you talked of the from dead to deadly, we saw the latest GDP estimates come in. We've got 7.8% for the Jan to March quarter. We've got a full year of 7.7%. And these are not easy numbers considering all the global turmoil which is happening. So when we see these kind of numbers, in fact, world's fastest growing economy, and at the kind of scale and complexity we have, then that really means is we have to look at what is actually happening on ground. And what is actually happening on ground, if you see, is possibly three cylinders continuously firing on all guns blazing. We are seeing manufacturing really picking up. A lot of people have been saying manufacturing near in the last just last week we saw the fastest PMI in manufacturing. Services, of course, is our core bread and butter. And when these two things are supported by enabling regulations or enablements which further accelerate this, then there's no reason. The numbers are very clear that the growth is actually happening on ground.
क्योंकि सर अगर आप देखें when you see the pattern, of course there is a slowdown. कहीं ना कहीं growth slowdown तो है. ठीक है. From 7.5 now we are projecting 6.6. I think we'll close 7.1. हमारे भी ना projection पता नहीं आके खुले में नहीं. Why can't people come out and say, boss, we will grow 7+% यार. नहीं, we should be a little this thing. Our so-called economic institutions, they don't want to come out and openly say it. Builds a lot of confidence in the market, but no, this is so no, we'll keep it low, conservative figure of 6.6%. I'm not able to understand why. But sir, the main question people are asking, $500 billion has left the market. That is your FII and FDI and all these. मेरा एक counter argument रहा है कि guys, what you need to see is the long term and the short term. जो स्ट्रक्चरल कैपिटल होता है एंड जो शॉर्ट टर्म कैपिटल होता है, जो हम लोग हैं कि यार कुछ डालो, कुछ पैसे बनाओ, अच्छा शेयर ऊपर हो गया, बेच दे यार.
करेक्ट.
हेल्प अस अंडरस्टैंड दिस गेम कि ये जो इतना सारा पैसा बाहर गया है, ये क्या है? व्हाट इज दिस?
Sure. So I think let's break it out into two parts. One, as you talked about, the structural growth, which is the FDI. And from a gross FDI perspective, if you see, year on year we have been growing at the highest level. Even last financial year number which has come as we are 90 plus billion, so it is the highest ever level. Now the concern, which is the two part, one is the net FDI has come down because people have also repatriated. Secondly, the FIIs or the FPIs continuously pulling out the capital. So I think they are driven by two different aspects. The FDI, which is getting pulled down, that is really a long-term investment done by the private equity venture capital folks, and all of them have a typical 5 to 7 year or kind of a cycle where they have to produce the return and return the money back to their LPs. So the fact that actually FDI is also flowing, it really represents that the businesses have done well only then, because no FDI is going on a loss. So the fact that people have made money and they are going out, that also gives that it's actually a two-way free flow, and the businesses have done well. The second aspect related to FDI is, even if the capital has gone, but fundamentally someone invested into a manufacturing, someone invested into a fintech, someone invested into a services economy, that business is still there. The growth which has happened, the employment which is still generated, the GDP generation which is happening from initial investment, all of that is still there. As you mentioned, everyone wants to book the profit once in a while. They have to do it. And if you see the fact that if the investments are still coming at a higher level, then that means people have the confidence that in the next cycle I'll make better money. Now coming to the FII, which has been the biggest concern, and I think there are two factors here. The key factor is, one is the global crisis, which is something which is not in our control, and triggering from there the risk of mechanism. And globally, all these FIIs and FPIs, they have a very strict mechanism of what happens when a risk off mode is there. So with the global risk off mode on, the US yield rates are have increased. Everyone wants to be conservative. In that case, the even in domestic that is true, right? So if everyone wants to be conservative, all which is happening is the FIIs and FPIs, they are pulling it up and taking it back home to wait for a better day. And the second aspect, which has been a trigger, is there's been a lot of hype on AI and high tech, and especially countries like Japan, Korea, with Taiwan, and we do not have a AI high tech portfolio, so as to say. So companies are just rotating. But that, if we really want, we, as you said, we want to play the structured, resilient long term game. So we are okay if some of that hot money goes off. If just yesterday, if you see, I think Kospi went down by some 20% in 2 days. Tons of microchip guys are down in a 10% in a day. So that rotation will happen. Maybe the hottest markets are there, and just like how FIIs and FDIs have taken their current profit, it's quite possible the next sector rotation will happen, and then we are poised for that.
So what do you see, sir? This is what ये temporary है क्योंकि because people are kind of booking profits. What is it? I mean,
yes. So as I said, two things. One is the risk off mode. So moment a risk off mode comes, I've seen this cycle as a CEO for almost last 20 years. It happened in GFC. It happened in even the dot-com bust mode. That moment a risk off mode happens, the internal processes kick off, that you have to move the capital to secure uh, capital, right? So some of that is due to risk off mode. Second is, as I said, due to the high tech boom, but it will come back. And today, if you're seeing, the FDI is already coming. The fact that, as I said, that despite after the profit cycle, we are still seeing it's like almost a higher high being made in the FDI investment. So if that is coming in, same way, if the global sector rotation happens, maybe last 1 week is just a small sample, but if that sector rotation starts, almost everyone is feeling that the AI boom and the high tech semiconductor stocks are all in overvalued. Moment that rotation starts, ultimately it is the value which will drive the FIIs and everyone else. And the fact that we are the fastest growing economy, it is only logical that the flow, we will have a fair share of that flow coming to us. May not be immediately, but over the next 6 to 12 months, that renewed build-up happens. And I think that's where we see the government acting as an enabler. So just yesterday, you and I were just discussing, right? We saw whatever can be done to ensure a certain degree of comfort, it has been done. On a growth side, RBI is staying at 5.25% so that they don't touch the credit growth, which has been there about 16%. But we have given concessions to FIIs for investing in government bonds. We are encouraging them to invest in long-term 15 to 40-year kind of sovereign bonds. The RBI is also guaranteeing FCNR accounts to ensure that the hedging risk will actually be funded by RBI and Ministry of Finance. And I think just some preliminary estimates came that between now and in September, October, where some of these measures are operational, we may see about 30 to 50 billion of foreign capital coming in.
Mm. So this change which has happened right now, that we can see, uh, जो अभी, the government of India and the RBI have actually given some benefits. What do you think is the target, sir? Is basically bringing in dollars. My analysis said, "Ki boss, this is about getting the dollars back inside the country. Get the dollars back, the dollar flow back. Ram se usko karo, and figure out how you want to kind of move forward after that."
Absolutely. So if you see right now, the key pressure which was coming was from our side was twofold. One is the current account deficit, and secondly is the with the rising oil prices, and that's
Correct.
where both of them put pressure on forex outgo. And currently, while we say we have close to about 680 to 700 billion dollars, which easily covers about 10 to 12 months of our requirement, the fundamental focus is how can we ensure we have more dollars. So it's always good to build a cushion for a rainy day. So you build in that cushion and use that cushion to leverage what is our foundational strength. And I think from our perspective, the foundational strength I see is three key things. One is the growth, which is clearly being driven. Second is the policy, which is supporting both from a fiscal policy as well as the various manufacturing and other policies. And the third is the banks have a very clean balance sheet. So therefore, their ability to fund this growth will come in. So we use dollars come in, let this be the three-way platform, and that we jumpstart. And at some point, possibly over the next
Hmm.
by later this year or early next year, the crisis starts moving to some logical resolution, and then we are ready. So we are not waiting for crisis to end. We pivot and we be ready to work in the best conditions, take the cards as we are dealt with, and do the best.
So So one major question that comes across, and a lot of people say, "Ki yaar, jo the amount of freebies and everything like that which is being given today, right? That puts a lot of huge amount of pressure on the exchequer, which is actually true. But is it just freebies, sir? I mean, this is one question that is plaguing me, because see what happens is, if you're putting money in somebody's account, he's going to spend it, right? So it increases your
Absolutely.
consumption to a certain extent. Secondly, to a person who was buying, I mean, if, let's say a person not very affluent, उसका सैलरी वैलरी कम है, इकोनॉमिक स्टार्टा में इतना ऊपर नहीं है, अब उसको he gets rice, dal, and probably atta. So he says, yeah, this is taken care of. Let me get some fruits, vegetables, milk, some chicken, some fish for my family or whatever it is. Uh, doesn't this actually, spate a different kind of consumption?
Absolutely, you're bang on, Adi, because I think this is where the integrated views has to be taken. And as you said, that people are only looking at this freebies being given, and hence it's bad. But in a certain condition, it is required. And the fact, as you said, it's almost like it's a consumer engine driver, because once you take care of the basic food, health, which is also, you have now Ayushman Bharat, then whatever is available either as a freebie or actually is given as a direct benefit scheme, the natural aspiration combined with the education, combined with the new youth which is coming in, they they will actually use their money somewhere. They will use it for consuming, say, the milk, the better products. Everyone has aspirations. The mobile is one big consumption thing. Secondly, so many new products are coming in, and the new generation which is there, if you see, whether they're looking for clothes, they're looking for textile, they're looking for entertainment, they're looking for q-commerce, so all of that is coming. So I think your point is absolutely valid, that when a freebie is given, it it has a twofold effect. First, it takes care of person's core needs, so almost addressing the core of the Maslow's hierarchy. And when the person moves up, then it is a consumption driven growth, and that is possibly represented by the fact that I think India is among the few emerging countries where more than 60% of our GDP is driven by domestic consumption, and that's what is actually helping us withstand any of the crisis, unless we compare with our our neighbor, which has got just 30% of domestic consumption, and rest is all dependent on either exports or state-owned enterprises. We are not at that mercy.
Because for me, yes, there is, of course, dependency एक create कर देता है, it creates a dependency of a certain section of people, on your, what do you call, on your government, and they're expecting the food, they're expecting this thing, that thing, but there has to be an upside to it, and that's something I've been thinking about. What is the upside? It's not just boats. What is the economic value that we get
Yeah.
out of it?
So I think the economic value which we really get is when the basic food, health, and even education, when these three things are being taken care of, then the cash which is coming in, that cash is actually definitely going to consume a whole set of goods and services, and that has a significant multiplier. One, the consumption demand goes up. Secondly, the companies which are operating in that, whether it's a manufacturing, FMCG, or any, or say even Q-commerce, they see that demand traction coming up. So that demand traction comes up, and that leads to their revenue growth. That leads to that GDP generation. And when that picks up, then you need more employment. The same set of people who are now have the education, don't have to worry about food security and health, then they are also available to take up the jobs which are being generated, and that jobs has a today's, I think, the portfolio of jobs, if you see, there is a very wide diverse portfolio, right from actually people working to just be the q-commerce folks, to actually people managing the logistics warehouse, to people working in startups and actually developing the space tech and deep tech. So you have the complete range which comes in, and that's how I think the multiplier of GDP growth, employment generation, and the overall ultimately the economic growth, it goes as a virtuous cycle. I hope that addresses it.
That's something I've been thinking about for a while now. Okay, what do we kind of, how do we understand this entire thing? Because there has to be the economic angle to it. It's not just government just spending money. There has to be the down the line impact for it. That's interesting. So, lastly, in the last section, I want to ask you about two major things. One is the stock market, right? A lot of people judge the economy. Oh yeah, stock market गिर रही है, economy कचरे में है. Okay, that doesn't make sense. The last time I saw a direct connection between the stock market and the economy is probably when Donald Trump speaks about it. But beyond that, I've not seen anything. दूसरा sir is about the rupee. Now there's a notional value कि भाई rupee गिर रहा है, लुट गए, बर्बाद हो गए, खत्म हो गए. So what is the reality? Can you put both these things into perspective also, sir?
Sure. So I think, as you said, that ultimately the value which will be driven in stock market, it will come from the factor of what is happening in their real world business. And it's like we get up every day and we see what's the weather like, which is possibly a daily movement. आज आज धूप निकली है, आज का दिन तो बहुत गर्म होने वाला है. हाँ, या वो आज सडनली बादल हो गए, oh, it's a good day, but actually you are in the summer season, right? So I think that is the difference between stock market vis-a-vis what is the real value. The there are series of factors which may be adding to volatility. It's almost like a daily season. But what we have to see is which season we are. And the fact that we are looking at a significant GDP growth combined with manufacturing growth, combined with new PLIs which have come in, which is bringing in industries which we had earlier not thought of, in whether it's electronics, semiconductor, and then the services, which is of course, and services now taking a new form in GCC, etc. So this is the India season, and when the India season is there, ultimately which will come up. Even if I take the stock market, if you really look, how much has the stock market gone compared to the volatility, right? In at a broad level, it is still moved only from about 10 to 15% of its highest growth. So that's not a big volatility. Secondly, if you slice it down, in fact, I was just looking in the middle of the week, the Nifty India Manufacturing Index, just from April 1 to now, it is nearly, it's just 2 weeks back, it had already hit its all-time high. So the fact is that they are green shoots which are coming in. We look at the new things which are coming in, defense, we look at aerospace, we look at
Infrastructure,
semiconductor.
infrastructure,
We
insurance,
look at
shipping.
the significant investments which is coming. Like,
Mm.
just to pull in one interesting data which I saw from last year's merchandise export data which came out of the 40 plus billion dollars. The interesting thing was there was almost 200 plus million dollars of new product country codes which were exported, which were never done. And this shows that the nature of our growth is actually becoming very different. As you talked of, we are getting into shipping, we are getting into new countries, Northeast Asia, Asia Pac, we are quickly pivoting to new areas. So when all of that will come in, definitely the stock market will ultimately driven by price earnings and value driven. So
Yeah.
the season is ours. Yeah. So I think that is really when what I see about the stock market.
What about
And
the rupee, sir?
yeah, so rupee, as there been a lot of discussion. Will rupee hit 100? It may not. I don't think anyone has the uh, view. What we have to see is, in fact, just yesterday I saw Dr. Shamika Ravi talking about a very interesting conversation. Is where she talked of that when you have multiple pressure points building up, you look at it, you ultimately need some valve to release that pressure. And I think now the way how the dollar rupee is playing, it may be that valve to reflect the current account deficit as well as the oil and the energy pressure. And that's where the fact that if we are taking the right measures, which yesterday got announced, I think within few hours the rupee saw the highest recovery in the last 3 months, and it again touched 95. So the fact is, uh, rupee may stay volatile, but I think overall direction, if we stay competitive, we continue to generate more manufacturing goods. We ensure that our exports leverage. We have close to some 9 to 10 FTAs coming in the next
Yeah.
few months. If we leverage all that, then the wave it will automatically appreciate. And in fact, two interesting things I want to say about the rupee depreciation. One is, generally if the rupee has gone down, in a way, if our focus is exports, manufacturing new products and services, then all of those, just like we are having pressure on oil and energy, the and some imports, the reverse script is also positive for us. So the exporters are benefiting, the services are benefiting because we are becoming more competitive. And the second point I wanted to bring in, if we see the Chinese yen to INR. In fact, the Chinese yen has appreciated by almost 20% vis-a-vis INR. So in
Hmm.
a way, everyone who's looking at a China plus one strategy, and every day we see announcements. So in a way, it is automatically making India more competitive country to be there. So in a way, I see that this is an advantage. I think every day we see some global executives coming and talking about that India is the place to be. Just 2 days back, I think the City Global CEO and their leadership team was there, and I think they issued a notice saying India is the best place to be
Yeah, yeah.
in. And when they are saying that, I don't think they're saying this is not city's view, this is city's outlook built on their global customers. So therefore, it is they are ultimately representing their customers. Similarly, I think the Kearney Global MD was there last fortnight, and he said if there is a single market which any of the companies need to be there, it has to be India. So the fact is, everyone understands that there is a short-term challenge. There are short-term dark clouds, but I think India's time to stand in the sunshine. Nothing can stop that. That's what I think.
Lastly, sir, last question is about when you look at जो economic structure है दुनिया का, उसके अंदर there have been shocks after shocks after shocks, right? You just had this war, which is another shock. COVID से शुरू हुआ. We started with COVID, went into Ukraine, went into Israel and Hamas, and now this one. And I'm sure आगे भी if you know geopolitically, if you analyze, I think the next war is coming already. Uh, is India trying to shock-proof itself?
I don't think we have a choice, right?
What are
If
we
we are
doing to do that?
I think two, three key things I see, key initiatives which I see. One is to sustain the domestic demand, which is there. Second is, I think, to move up the value chain in order to how do we really capture higher value. And if you just take one example, among the various PLIs with over 2 lakh crores of investment and close to 15 to 20 lakh crore of revenue which is generation, if you just pick up electronics and mobile, that itself has actually reached a stage where we are currently at about 20 to 23% of the value addition. And the clear PLI 2.0, which is coming for mobile, it's clearly driving a very ambitious agenda to move that value addition to 55%. So when you will actually have the higher value captured, both your top line as well as your profitability will increase. The third thing which I see is India is consciously working even within manufacturing to look at what are the high growth drivers for future, which will have both the dual demand of good domestic demand as well as exports, and build on it. And that's where I think, if we see aerospace and defense, we see drones, we see even semiconductors. The fact that 12 plants are under WIP, and two of them are supposed to go live with just within this year. The fact that uh, close to about 15 FTAs are already signed and they are going operational at an end-to-end level. So that is ensuring that whatever we build, we are also competitive in selling it off. And then the future is being built in a way that, how I'll say, is that as we move up the value chain, we have an entirely new product mix. We have the domestic consumption demand, and we ensure that for both for foreign investors as well as domestic entrepreneurs, we have the right ease of doing business and the enabling environment to build on it. So we create this platform, and it's almost like I will represent it. How there is a concept of a spiral in our ancient shunk, that every time, as you said, a cycle, whether it is a cycle of doom or gloom or a cycle of upside, every time we will finish this cycle of volatility, the answer for India has to be that we have to come up at a higher level from where we started, and then that's how we keep building a positive spiral.
True, true, true. That's indeed true, sir. There's no question about it. Thanks, sir. Thanks so much, for your time and very, very clear understanding. आपने जो समझाया है हमको, I think a lot of us will benefit out of it. I will keep in touch, of course. Post this, I think we should do this more regularly so that we can, keep an eye on the economy and see, any particular step that is taken, or generally probably a monthly sort of an overview, so that we can kind of appreciate what's happening around and what are we trying to get into. Because there's a lot of past. The reason I wanted to connect was the fact that the amount of attacks that have been coming across, with a view of kind of destabilizing, one can actually see that. And even if we can influence 3-5 people in not believing that, I think that'll be a absolutely a massive, massive victory. So thank you so much, sir, for your time and of course your support and your analysis. To the audience, my request is please like, subscribe, and let us know if anything else you want us to talk about. I will get sir back again and we can talk about it. Once again, thank you.
Thanks so much, Adi. Always a pleasure, and keep up the fantastic good work you are doing. And I think, for your point which you made, uh, I think ultimately results count more than the narrative. So we present results, uh, we work hard, and we actually see the ground happening. Ultimately, maybe people will need to find the new narratives, and we'll address all the objection and ensure we stay on the right path. So we
Yeah.
stay focused and we do the best we can there are always room for improvement, which is even in the current circumstances. There are a lot of challenges, but I think rather than worrying about the challenges, let's find the solution, and that's how we work. So thanks so much once for having me.
Absolutely, sir. Thank you so much. Namaskar. Jai Hind. Jai Bharat.
Namaskar. Jai Hind.